I can hear you,
So what exactly do you need help on?
bro. When it comes to industry, bro, like very different from force. Anyways, we involve, it involves smart money, but I
Uh,
have some issues, to find the interest because normally I got clapped. I got clapped, just by a week, or I don't know how to recognize the breakup structure in the smaller time frame.
uh,
Mhm. Or I don't know how to identify the right range, and it goes the complete opposite way.
okay.
Like,
So you from like obviously because I know you're a little more advanced than some of the people that be on our calls. So
mhm.
like you understand when I go over this, right? The
Yeah,
like let's say this is a higher time frame. We're looking at the 4 hour time frame.
yeah, I understand that market structure,
Uh,
directional bias, all that stuff.
and then do you get when I'm actually like doing this
Yeah,
also?
that's a small time frame,
Yeah.
a fractal. Mhm.
Okay, so basically, like I can show you what I go through when it comes to US30. Look,
Mhm.
I'll erase everything because I mean I'm finna run a car right now at 10, so
Mhm.
I'll just go over it there too. But like on a higher time frame, what I'm looking for is I'm looking to see where the market is going overall. As you see, US30 just it's been bullish since forever. Like it's
Yeah,
always
so those are always bullish.
yeah. So I pay close attention to like the last couple of months. Like this whole thing right here is what I've been paying attention to. I see
Uh-huh.
that it's creating highs, lows. I consider these a low on the wicks because in a smaller time frame, they're not wicks, they're
Of course,
candles.
the
Yeah.
candles,
So
whole candles.
yeah. So it's a high up there, a low down here. Obviously, if you were paying attention to my other calls, I did catch a move down here.
Mhm. Yeah, that's what I see. Yeah, you catch them at the very bottom or at the very top, and
Yeah.
that's what I
So
want. That's what I want to do.
okay, so like obviously, like I was telling you, it was creating a high and a low. So I pay attention to these areas. Like it's areas like these that I pay attention to the most. I'm looking for the market to respect these areas for me to basically come in there and take these opportunities. As you can see right now, I actually closed this trade out already. I was happy with what I got, so I closed it out.
Oh,
I could have still kept holding it, but I'm honestly waiting for this area to be respected. Obviously, like around the wick here.
yeah.
Um, I'm waiting for redistribution. Obviously, distribution and redistribution, right?
Yeah.
Okay, so after I look at the weekly time frame, I'm going down to the 4 hour, and on the 4 hour and the 1 hour is where I'm identifying my player range. So, like, let's say this didn't exist for right now, right?
Mhm.
This here, as you can see, um, by looking at like my highs and my lows, I got a low, I got a high, I got a low, and a high created. Recently, he came and created this low. So what I'm looking at is obviously that after it comes and creates this low, it's gonna continue, it's gonna come up and possibly come and create this high.
Mhm.
So I was actually waiting for that. Obviously, the market never came back down. It did what it did. It respected. So what I was
Mhm.
waiting for, I was either, like I said, I go in the 4 hour, I go in the 1 hour, and identify my play of range. I learned this
Okay.
from Matthew. I don't know if you're in his Abundant Capital, but
I watched his videos, some of his videos.
okay, yeah. So I identify my player range just like he does, and I pay close attention to that. So once I'm looking at my player range, I'm no longer paying attention to anything else. I'm not looking up here. I'm not looking nowhere else
Yeah,
because
because it's out of your range, of course.
yeah.
Okay.
So like I said, if it has to be in the area where it's at. If not, I'm not playing it. So
Mhm.
I go down to the 1 hour just to make sure. Obviously, as you can see, my play range is still within that area. It's this big candle that I'm paying attention to. The last
Mhm.
push up before that big downfall.
The
So
institutional candle.
yeah, so yeah, the institutional. candle. In this time frame, it's the institutional move because obviously smaller time frames, this is more candles.
Yes.
So I'm identifying my play range, and then as you can see, what I've noticed with US30, every time that it's in an area where it looks exactly like this, the market tends to come back and mitigate off of an area, off of basically this whole area down here. Where's my right here? So I was basically just paying attention to this whole move down here. I was waiting for the market just to come into that area. And another thing about US30, it tends to react a lot off of small imbalances. So in the 15-minute chart, I'm just basically paying attention to what can possibly be my targets. So this imbalance up here could have been a good target. Obviously, in the 4 hour, you can see where I marked my range.
Yeah.
Or I could have played somewhere around this area here and wait for the market to respect this area. As you obviously, we never know. I know already that it did break this structure to continue going up on the 4 hour. But for somebody who didn't know, you could have waited for evidence to either come down, break structure again, so you can get into that sale. But I was paying attention to the weekly time frame because the weekly already reached an area where it was supposed to basically react off of. So I did not see the market going back down into like any lower than what it already was. So I'm still in my 15-minute. I identified my range. I identified the place where I would be basically playing off of. At this point, we already started going in the bullish momentum. And obviously you can see it's coming out. And I
It was a
believe,
clear break right there.
yeah, I believe I pulled the trigger right at this imbalance here. And I'll go ahead and mark that for you right there. And the reason why I did that was because, like I told you earlier, it tends to react off of small imbalances. And then this is long. It's healthy price action no more.
Yeah.
Healthy price action. So it doesn't have to come back into this area. There's nothing for it to be going down there for. So what ended up happening, obviously, you know, it wicked in. And I pulled. I don't set limits. I pulled the trigger as soon as it gets into my area that I wanted to get into. Because
So that happens during New York most of the time.
yeah. So I believe if you pay attention to here, my John Fib and London, New York Open. So right now that's the London Open. So everybody who was playing in London played in London. I'm asleep during London, so I just pay attention to what happened during London, but I don't do any plays when it comes to
London. Okay.
So let me fast forward it a little. All right, so as you can see, there was a lot of internal liquidity in here that needed to be swept. So that was like another major key for me to like, okay, so it's really gonna happen. It's really getting ready to take out some of that liquidity that it created during London session. So I mean, just to be honest, everybody who played during London became the liquidity.
Okay, I understand.
So right at New York Open, as you can see, my little purple line started forming at New York Open. I was just waiting for that imbalance to get filled. Obviously, I set my stop loss at this low since this is all healthy.
Yeah.
I don't worry about that area no more. So this became my stop loss. Obviously, if you want to see it like this, entry literally right at the imbalance. Stop loss down there. It was a big risk, but
how many pips are in there?
56.
56. Those are like the same as in Forex pairs. That's
If you're
something
trading
that
US,
sometimes it confuses me because when it comes to indices, you have to be like more careful when it comes to your lot size.
Yeah, so if you're putting like 56 pips, bro, I'm just to be honest with you, you're risking a big amount of your account. I know my stop loss was set there, but I believe I went down to the 1 minute and then I set my stop loss a lot shorter.
Good.
I believe I set it down to this low here.
Hello.
Yeah, so it did become a lot lower. I don't usually take trades that are more than 20 pips or 30 pips. So if it's around that area, then like 38, that was good for me. The risk to reward was there, so that's why I took it.
Mhm.
Obviously you saw right at the open. At the open, it wicked in,
Yeah.
and it's doing smart money concepts again. So like, one thing that I do want to tell you. So like, let's ignore this. You have to pay attention to like when you're doing smaller time frames. You want to be able to, where the hell my chart go? You want to be able to identify like your breaker structure in higher time frames too. So if your break structure on a smaller time frame, then you got to make sure that it breaks structure in a higher time frame too. Because if it doesn't do that, then that's where you're gonna mess yourself up. You're gonna be like, okay, it broke structure on the 1 minute. Let me play that play. And if it never broke structure, then that 5 minute, like I said, and other calls before, higher time frames prompt the lower time frames. So like I said, in and like to dumb it down a little, higher time frames are stronger than lower time frames.
Yeah, it
So
has more. It has basically they have more hierarchy.
yeah. So you got to make sure that the market does break structure on a higher time frame. So like
Oh,
let's look at today's play at the New York Open. As you can see right here, it was literally like the easiest play. But look at the time frame that I'm at right now.
5 minutes.
I'm looking at high, low, high, low. What did I see right after that break of structure?
Right there.
Right there. So it broke structure. Somebody that was looking at a higher time frame would have gotten into this trade down here because there's an imbalance literally right there. Stop loss down at this low right here. And a smaller time frame, obviously it looked a lot better. But that's from the 5 minute. If you go to the 1 minute, I actually entered at the New York Open. Look at it here. You got low, high. It comes down, creates another low, high, low. What happens? It broke structure here. So what did I pay attention to was this last push move right there. And that was my POI. As soon as it tapped that area, I pulled the trigger. And a lot of people, when it comes to US30, they want to see that big push. Sometimes US30 doesn't do that. There's a lot of news backed up that like push the market up like that too. So in order for like the market to do that, you have to like basically follow the news and stuff. But there wasn't anything important that came out during today, and that's why the market did what it did. It barely moved. But if you were patient, you're looking at the 1 minute. All of this could have been like, well, like what, like maybe 15 minutes. As soon as that happened, you were already in. At this point, your risk to reward is it's amazing because I think it's only like a 12 pip stop loss, 15 pip.
Oh shit.
So from there, obviously, your first target could have been this high at 88 pips. You had an imbalance down here, as you can see to this side right here. You have an imbalance there. Going to higher time frames, I said follow your structure. Look at where market is. You have basically another imbalance in this area here, and that could have been your target right there. And it broke all of these. Like it broke. It didn't respect this. It didn't respect this. Didn't respect this. So now pay attention to this area here and make sure that the market respects this area. So as you can see, market, it basically did respect that area. It came in, and everything is simple in the smaller time frames.
Yeah.
I'm sure you can see that sell off, how it happened.
Yeah, I broke
High,
right there.
high, low, high, broke structure. Look at that imbalance
That
right
was
here.
a perfect entry.
Yeah, wick entry right there.
We
And
can trade.
like I said, every small imbalance, US30 likes to play off every small imbalance. As soon as it does that, pull your trigger and it's game over. Write it down. Like I said, look at higher time frames. Look at your 30-minute. Make sure that like you're paying attention to all of that. Like you got a high here, you got a low here, came back, didn't really create a high, but it's in that a position where it's creating this high where it respected it. So where's market going now is gonna come and create that low.
Oh,
So,
makes sense.
so always look at smaller time frames with better entries, but always look at higher time frames to figure out where the market's gonna go. Because if you can identify that, like I did in the weekly time frame, that's why I caught the move that I caught, because I knew that the market had to come in there and respect this area. Like, let's say that never happened. Like, let's say that it came and it did this, it went and then it broke. That broke structure. Eventually, it would have reacted off of something. Yeah, I would have missed that, but or maybe it could have reacted off like an imbalance down here, right? But wherever it reacts off of, make sure it's reacting off of an area that like it's a low or an imbalance. And as soon as it does that, make sure you do your smart money concepts and then follow the trend, pull the trigger when it's necessary. And then ride it all the way up to like either an imbalance where you see it's respecting that imbalance, or where you see a high being respected, and then wait for redistribution and reaccumulation. I do not take no trades unless it's reaccumulation or redistribution, because like I've said before, market can keep going. And if it doesn't give you that evidence that it's gonna shift in direction, well, you're gonna get clapped majority of
Yeah,
the
that's one. That's one of my mistakes. Like I don't normally I don't wait for their reaccumulation or distribution. And I get clapped. No.
yeah, bro. Because I mean, to be honest, when I first like really took trading serious, I watched Matthew's video like one time, and from there, I was like, okay, so if it's respecting that area, just wait for the market to come into that area and then pull the trigger, and pull the trigger, pull the trigger. But then I noticed like it was going my way. I literally flipped the. I'm not even gonna lie to you. I think I put like 250 in an account and I flipped it to $2,000 in 1 week.
Damn, that's crazy.
Yeah, and I was like, okay, Ben, I get it now. Like I get it. But then I during that whole time of me doing that, I wasn't really paying attention for redistribution or reaccumulation. I was just waiting for the market to reach that area. So what ended up happening, these areas no longer got respected. So what happened? I would pull the trigger, and what happened? Market made it look like it was going my way, and then boom, stop loss, boom, stop loss. And that account that I had, I'm telling you, I took it all the way back down to like $100.
Oh shit.
Yeah, and that's what really made me like more patient, waiting for reaccumulation, waiting for redistribution, in order for me to take those trades. But I mean, yeah, did you have like any questions, bro? Like it's not even with that, like I looking at gold, look at gold, how it's moving. Higher time frames, identify all of that. Like look at this. It was in a bearish momentum. Low, high, came down, created a low. What happened? Broke structure.
Right there.
Right there, this area
They're
here.
in their accumulation right now.
Yeah. So pay attention to all of that. Look, it broke structure down here again. This could have been your reaccumulation. And then obviously go down into smaller time frames so you can get better entries. Because bro, like I can literally trade US30 and take a lot of trades and not worry about like them going opposite direction, because my stop losses are real little, like a 12 pip stop loss and 8 pip stop loss. Compared to some of those trades that I do take, like some of them are 20 pips, 29 pips, off of just basically off of just distribution and accumulation. So always wait for that extra evidence so you can get a way tighter stop loss. And then from
Okay.
there, like bro, like I'm not even gonna lie to you, when you're trading US30, and then you drop a 0.04 and your account's barely at 800, and that thing flies 1,000 pips, you just like quadrupled your account. Like a 0.04 can take you to $1,000 within minutes, and from there, honestly, the game's over from there. Like you're making $1,000 every single trade that you take.
That's crazy. Yo, how much can I start trading US30? How much money?
What broker do you have?
Prosperity.
So like Prosperity Forex, I actually have Prosperity.
Oh, you got that one too.
Yeah. So there's US30, which is a regular one. There's US30 Pro, which is like a way tighter spread. And then there's US30 Mini. If your account isn't big enough, because for like US30 and US30 Pro, you need like 500 playing it, like you're playing it to like basically hurt yourself, because one trade that goes wrong the opposite direction, then you're missing, like you're gonna hurt yourself. But if you want to play US30 Pro and US30 regular safely, you need like at least 1,500 in your account.
1,000.
Yeah. Okay. But if you only have like, let's say 200, 150, I believe even like $30, you can use US30 Mini, because that for US30 Pro on Prosperity, your contract size is 100, so that's why it moves the way that it moves. And on Mini, on the Mini, I believe it's only 10. So for every, I believe how this contract size works is for every like pip that it moves, you're moving 100 contracts at once. So that's why it moves the way that it moves. So like if you drop a 0.01 on US30 Pro, that's like dropping a standard.
Oh shit.
Yeah. So if you drop a 0.01 on Mini, that's like dropping a 10-cent move. And once you feel like you're, because it all moves the same. Once you feel like you're ready and your account's where it needs to be, move on to the Pro. That's where all your money's gonna come from.
So you're trading the Pro one? Yeah.
Okay. I trade Pro. I don't trade the US30 regular, because like I said, the spread is a lot tighter.
Okay. I understand. Yo, bro, one more question. When it comes to FTMO, how does it work? You know, like the risk reward.
The FTMO is the same way as the US30 Mini. So the contract size is not 100. That's why it's hard for a lot of people to hit $1,000 right away, because they don't know the contract size, the right lot sizes to use. I believe the 10K account, when I took it, it was I was dropping 0.50s.
0.50s.
Yeah, but that was over leveraging.
Okay.
I suggest you drop 0.10s. You can do a lot of 0.10s on the 10K account. 0.50s would be like for a 50K account.
So if I'm taking like the 100K account,
you can drop a standard.
Okay.
Yeah, but make sure that you're always using a small stop loss.
Okay. Yeah.
But yeah, it'll bro, US30, you can pass that shit with one trade, as long as you catch it at the right
move.
move.
The thing I like about US30 and SPX is like the moves are clear.
Yeah.
Regardless if they, wake you out, the move is right there. Like you can see like the higher highs, higher lows, lower lows, lower highs. Because I was trading like regular Forex, but they kind of move different, because of whatever happens in the world. But you can see like the indices, they're always bullish. You see the bigger time frame there, it looks perfect, like an uptrend. If you go to smaller time, you can see the week of logic right there. You can see clearly the breakup structure, all of that. But yeah, my question was more about the entries, because like I said, sometimes I get clapped for a week, or the reason why, another one I just realized is because I didn't check the directional bias,
Yeah.
you know, and it goes the opposite direction.
Yeah. I felt like that's what I really understood a lot about US30. And it helped me a lot knowing that there was an open every single day. Because I'm not even finna lie to you, when I'm on EU or GU, I don't know exactly when the market does the play that it does. Like, when did it do that? At almost 12, which was like 10 o'clock for me.
Mhm.
And like, that's too late for me. Like,
Yeah,
I'm not in the trade no more. I'm out. I'm doing what I'm doing. As soon as
yeah,
8:30 happens, I'm in that trade. I bought and I just let it right up to the top. I mean, from literally from the open when I entered the trade till a 14, which is like 1 o'clock for me,
huh?
I was done. Like, it was over. Obviously, if you swing trade, like, if you swing, my bad, bro. If you swing trade, obviously your trades are gonna your trades are gonna last long. But I mean, look at this. Like, obviously there was no play here. But oh, I mean, there was that sell off, but I didn't trade that day. My daughter was sick, so uh, but as you can see, it's like boom from the open to like a few minutes later, 172 pips. 172 pips on US30. That's all you need.
Sheesh.
Yeah. So compared to this, like, let's say you took the entry here at 12, which would be 11, or like what, 10, um, 22, which would be, so like literally a whole shift at work could, like, 11 hours, 10 hours. That's
Mhm.
like that's how long it took them to even make, like, what, 46.
46 pips.
Yeah. So that's why I like US30 a lot, because I'm in and out of the market. It's like HFX.
Yeah,
So
but in Forex.
yeah.
Mhm.
So it's just simple. Always wait for the break of structure. Come in, pay attention to that move. Look at that. Look for an imbalance, because it's most likely going to react off of an imbalance. Right
Most of
after it does that, pull the
them.
trigger, let it ride.
Sheesh.
After it comes and creates like let's say it was to do a second entry, most likely I'm gonna pay attention to this right here. So it can happen during London. If it doesn't happen during London, look what it's forming during London. Internal liquidity. So what are we gonna wait for? That internal
Oh,
liquidity to get swept. So tomorrow, just a heads up, pay attention to this area.
all right. I'm gonna take that. I might take a look on that area because yeah, it looks like potential entry right there.
Yeah.
Still
Because I
cool.
mean, like I said, overall, it's bullish. It broke structure. It did what it did. It's going to continue to go bullish until it reaches to that very top on the weekly. So somewhere
Hmm.
around that area.
Yeah. So you would
Uh,
you could have hold it, right?
what's that?
You could have hold it basically at the bottom.
Yeah, I could have, but like I said, it was already up like 1,700 pips, and I
Yeah.
was like, fuck it, I might as well just close it and catch every single move.
Yeah.
Because I like trading. I'm not finna lie to you. I hate swing trading because, like,
Yeah, you have to be more patient, you know.
yeah, so like, I caught the move at the very bottom, but like I saw all of these plays play out. I'm not even gonna lie to you, I didn't trade at all like this week. Like, this is the only trade that I paid attention to today, but like from the moment that I caught it to, like, because I caught it down here.
Mhm. Okay.
Like, I missed one, two, three, four. I missed like four moves that I could have easily made money on, but I held it. I could have easily just clapped all of these and ran with the money.
Mhm.
But I mean, I'm to be honest, a lot of people would have honestly taken this big 1,700 push
Yeah.
compared to those, like, what, 400. Obviously, when I have a much bigger account, obviously I'm gonna catch the move at the very bottom, and I'm gonna catch all of these too. So
Mhm.
while that one's working in the background, I'm gonna make more money.
Mhm.
So yeah, pay attention to that area tomorrow. It's clear. It's literally how I caught the trade at the very bottom. That imbalance down here, your stop loss will be where's my brush? Your stop loss will be here.
Mhm.
And it'll wick in. Internal liquidity is gonna get swept.
Mhm.
If it
Yeah,
does
that's
that
a cool
during
setup.
London, if it does that during London, then like I said, it's gonna come and create highs and lows, break structure, and then just wait for London, New York open, catch your re-entry on that, and just let it ride.
Hmm.
But most likely, I just feel like it's gonna consolidate until it just wicks in on New York and takes off.
Create more liquidity. Mhm.
Yeah. But yeah, bro. Any more questions?
No, bro, that was pretty much it. Everything's clear. Like, yeah, it was most like about the interest. Now I realized that it likes to weekend imbalances.
Yeah. So not really much big imbalances, but
Small
smaller
imbalances.
ones.
Mm-hmm.
Smaller ones that make more sense.
Mm-hmm. Especially that one looks potential.
Yeah. So I mean, if we go down to where I took my trade, you can see it looks exactly like it.
Mm-hmm.
Let me replay so I can do that. So, is it down here where I caught it? I don't even know. I forgot. I don't believe so. Yeah, I don't think it was here. It's been so long. I caught that move last week.
Last week.
Yeah. So, and I think I just closed it. When did I close it? I think I closed it on I think I closed it on Wednesday. Wednesday, I think. Or let it play a little. Yeah.
Hmm.
See, it's literally right there, that imbalance.
Hmm.
I believe it is what is it?
That was the one.
Yeah, what's that one?
Mhm.
So
Right there.
it's literally this exact same thing. Came in that little small imbalance.
Mhm.
So yeah, it's a potential area that I'm looking for tomorrow. And if I do catch that move, then I'll hold it for the whole weekend.
Hmm.
I'll take my charges because you know they charge you for like all of the holding it for the weekend and all that.
Yeah.
But I mean, with US30 and the amount that you're making, they only take like $2, $4. So I rather take the $4. I know I'm gonna make a lot more off of it.
Facts.
So yeah, for tomorrow, obviously pay close attention to that area, or it can come back down to this area, but we never know.
Mhm. All right, makes sense.
All right,
Perfect.
bro. We are about to start the call soon, so I'm gonna go ahead and do that. I mean, unless you have other questions.
No, bro, like that's clear. Like to be honest, that was on my only doubt. Like I know smart money is just have to back this more.
Yeah. Back to US30 a lot. If you want, put that John Fib indicator on your I believe it's just John Fibonacci.
Mhm.
Yeah, John Fibonacci.
Okay, bet.
And then it shows you every London and New York Open. And if you ever get a chance to buy his book,
Oh,
in his,
the fundamentals?
yeah,
No,
in his
technical
book,
analysis, right?
huh?
Technical analysis book?
Yeah, in his book, he talks about indices or indices like to react a lot, like to mitigate a lot off of London session.
Oh shit. Okay,
Yeah,
I'm gonna get that book.
yeah, and like it's a real good book. I bought it when he released it, and made complete sense.
Uh-huh.
And like I said, it mitigates and the indices mitigate a lot off of London session, and it makes sense to some of the trades.
Mhm.
But I mean, yeah, bro.
All right. I'll
All
do
right,
that,
bro.
bro. I appreciate your time, bro. Thank you so much, bro. I'll
Yes,
see you
sir.
another time, bro. All right. I'll let you know what's up with US30 and how how I get it. I go improve it.
All right, bro. I'll send you the recording in a little bit. I'll just let it download and I'll send it your way.
All right. I appreciate that, bro. Thank you so much.
All right, bro.
Have a good
Take
night.
care.
I'll see you in the next call.
All right, bro.